Let's talk a little bit about the Delta variant and whether that gives the Fed some cover to delay more explicit discussion of tapering and rate hikes and so forth. Does it, in your view, do that?
I think that not internally. They are going to be discussing this issue despite the Delta variant. Because there's a tremendous amount of uncertainty about whether the Delta variant will be a serious problem to the economy or not. It's a serious problem in many states, but that doesn't mean that it's going to have a big effect on the economy. So I do think that it does add an important wrinkle to what's going on. My view is, up to now, I think the Fed has been behind the curve. But in fact, if the Delta variant becomes a serious problem in terms of affecting how much spending there's going on, then in fact, they're going to have been right. So sometimes my mother always used to say to me, "It's better to be lucky than good," but that could very much be part of the scenario that we could see going forward. But we don't know. So I think internally they're going to be discussing this. But I think externally, they don't need to rush in order to talk about this to the public.
Rick, I don't know if you heard what Steve just said at the close of our last discussion when he said he thought the Fed was at risk of winning the battle, kind of to the point that you're making, but losing the war.
Yeah, so, I don't know. It's always a question about how things evolve. There's always a lot of uncertainty about that. And you have to forecast. And forecasting is a very tough game. That if you make really bad mistakes, you get in real trouble. But I do think that one thing that has been positive is that the Fed has been emphasizing more of their concerns about inflation not being as temporary as they thought it was. And it's very key that the markets understand that we're not going to have deja vu all over again and go back to the 60s. We have a lot of things very much like the 60s, very expansionary fiscal policy, economy that's roaring ahead. That there's limits to what's going on in terms of the labor market that could push up prices. However, in the 60s and 70s, the Fed did not do its job properly. It did not actually say that we have to control inflation. And they've been much better on that this time around, that they've indicated that, in fact, if inflation is not as temporary as they think, that'll actually mean that they have to do more in terms of raising rates and having the taper occur sooner. So I think that communication has been very positive. But we'll have to wait and see.
Shepard Smith here. Thanks for watching CNBC on YouTube.